Hello and welcome to Questioning the Manager. This week we have Mike Curley, Fund Manager of Henderson Far East Income Limited. Now this is an equity portfolio. It aims for income and growth and it invests in the Asia Pacific region but excluding Japan. Mike, welcome to Questioning the Manager. Okay, we've got to start with Trump. During his campaign we saw his policies seem to be focusing on protectionism and that they seem to be aimed at China. So do you view this as an opportunity or a threat?
Well, I think thankfully we haven't seen anything in concrete news yet in line with the rhetoric we saw leading up to the election. I think that we should all be grateful about that. If we get trade barriers, then clearly that would be a pretty bad situation for Asia. Or other protectionist policies, but at the moment everything's so unclear it's difficult to make any judgments one way or the other. From a trade perspective, Asia seems to be doing quite well, and China as well, so exports are all strong, and we just hope that that continues and nothing's put in the way of that.
At 263% of GDP, Chinese debt seems quite high. Is this something that bothers you?
The speed at which we've got there bothers me. You're right, 263% of GDP is a big number. It's not too dissimilar to what we've got in the US and the UK, but it's a big number. I think the positives, the positive way of looking at it is to say, well, look, okay, there's a lot of debt there, but most of it is owned by Chinese. It's not internationally owned. So people exiting the debt markets in a rapid fashion is unlikely. Also, there's a very big savings pool that backs up this pile of debt. Which is, again, unlike the US and the UK where the savings ratios are quite small. So it's the speed which worries me rather than the absolute level. But I think maybe people are worrying a little bit too much about the levels of debt in China.
Okay, back to Trump. Since his election, we've seen a lot of investors, particularly in Western markets, placing trades on the back of expected inflation coming through, reflationary trades. Are you seeing this in Asia?
Yes, people are expecting stronger growth globally. We've seen that in interest rate expectations, mainly in the West, to be honest, rather than in the East. But yes, the financials have done better, cyclicals have done better, materials have done better in expectation that we're going to get higher growth and maybe even stronger growth from fiscal response out of the US, etc., or greater infrastructure spending. So the same trades have worked in Asia as they've worked in the rest of the world. The question is, how long that can go on without any concrete measures to back that up. That's the big question.
Okay, finally, Mike, this is the first time we've got to speak to you this year. So what do you expect out of the rest of 2017? 2017,
I suspect, is going to be a little bit like 2016. Growth will look a little bit better in Asia. It's already looked better so far in the first 2 months of the year. But we've got the worries again of protectionism, politics, policy, etc. If you took that to one side, I'd be very, very positive for this year, but it's very difficult to ignore that. I think from an Asian perspective, earnings are strong. I think companies look good. A lot of cash flow generation. The prospect for dividends is a very, very appealing one. What does worry me slightly, of course, is there's a lot of stuff we can't control.
Mike Curley, thank you.
Thank you.